You won't see it trending online or coming up in a casual conversation. Think of it like this. When you invest in a structure note, you are lending your money to one of these big banks. Do you want payments monthly, quarterly, once a year, or maybe all at once? You can choose how much protection you want on your investment. This is why I love structure notes. They give you control. You know, most people don't know this. And honestly, I get why. Structure notes. It's not like that's something you hear about every day. You won't see it trending online or coming up in a casual conversation. But as someone who helps people plan and grow their wealth, I have seen how helpful structure notes can be. The truth is, most people have never heard of them, and even fewer understand how they work. So today we are going to fix that. Let us start with the basics. So what is a structure note? It is a financial product offered by big banks you have definitely heard of. Names like JP Morgan, Goldman Sachs, Citibank and others. And even though it sounds fancy, it's actually a type of bond. Now, if you are thinking, wait, what's a bond? Think of it like this. When you invest in a structure note, you are lending your money to one of these big banks. And in return, they make you a promise. Kind of like when you put money in a fixed deposit at the bank promises to give it back plus some profit. Structure notes work in a similar way. You give your money to the bank and they promise to pay you back later with something extra. Now, what makes them special is that you can customize how you get paid. You decide, do you want payments monthly, quarterly, once a year, or maybe all at once when the note matures. And you also get to choose how long you would like to plan for, whether it is for 6 months, 2 years, 5 years or more. But here's the thing, your money is not locked away forever. So structure notes usually come with a guaranteed buyback from the issuer. That means if you ever need to get out before maturity, you can sell it back to them. Just keep in mind, if you exit early, before maturity, the amount you get back might be less than what you invested. It depends on what's happening in the market at that time. So you have the flexibility. One of the nice things about a structure note is that you can design it around your goals. If you're working with an advisor who can build those, and most people do, because you can't usually build one on your own, then you get to pick how long the investment lasts. Say someone came to me and said, Khalid, I want a structure note with a 3-year timeline. Here's what I would do. First, I'll define the tenure. In this case, 3 years, and the amount you want to invest. Then we move to the next part, the underlying asset. Now this is the fun part. It could be something like S&P 500, Dow Jones or Nasdaq, or maybe it's a single stock or even a basket of stocks. As long as it is a security that trades on an exchange, you can use it. For example, let's say we go with the S&P 500. So now we have two pieces, a 3-year timeline and the S&P 500 as the underlying asset. Next question, do you want this to be an income note or a growth note? If you choose income, the note will pay you money regularly, maybe every month, quarter or year. If you choose growth, it won't pay you anything along the way, but at the end of the year 3, you will get a return based on how much the S&P 500 went up during that time. Either way, you're making choices that match what you need. The next thing we look at is protection. Now this is one of my favorite parts because it gives peace of mind. So whether it's an income note or a growth note, you can choose how much protection you want on your investment. Let me explain what I mean by protection. Say you came to me and said, Khalid, I want to invest in the S&P 500, but I don't want to lose my original money unless the market drops more than 30%. That makes sense. Market go up and down. and nobody wants to lose everything over a rough patch. So I could build a note with 30% downside protection. Now here's what that works for a growth note. At the end of year 3, if S&P 500 is down but not more than 30%, you will still get your full original investment back. Isn't that cool? You're investing in the stock market but only taking on some of the risk. And if the market goes up, you share in the gains depending on how much your note is set up. Now, this works a slight different for an income note. With an income note, you know exactly how much you will get paid each year as long as the market doesn't drop by more than 30%. It's like a built-in safety net. So whether it's an income or growth, you get to decide how much risk you're comfortable with. Now here's the final piece. How much of the upside do you get? For example, let's say you have a growth note with 30% downside protection tied to the S&P 500 and 150% participation. That means if the S&P 500 goes up by 10% over 3 years, your return would be 15%. If the market falls, let's say by 20%, you still get all your money back. Because remember, you're protected up to 30%. That's the part of 30% downside protection. This is why I love structure notes. They give you control. You pick how long you want to invest, what market or index you want to track, whether you want income or growth, how much protection you want, and how much of the upside you participated. It's not magic, it's maths designed around what makes sense for you. Now, before you invest, make sure you work with someone who really understands these notes, and always read the term sheet. It's the document that explains all the details, risk, and how everything works. Structure notes are not for everyone, but if you want growth with some protection built in, they might be exactly what you're looking for. If you're seriously considering investing in a structure note, or even just want to make sure you're asking the right questions, I have got something for you. I have put together a free resource that walks you through the 8 most important questions you must ask before buying a structure note. Now, this guide is designed to help you feel confident and fully informed before making any decision. It is based on over 17 years of experience of helping clients safely grow their wealth using structure notes. So click the link below or in the description to download your free copy now. Now let us make sure you understand exactly what you're getting into so you can make smart, confident decisions with your money. Thank you for watching. See you in the next video.